Okay, so today my topic is maximizing gains using momentum-based Fibonacci. So for those of you that were at the Super Trader Summit in Chicago, you know that I've put a lot of focus on reading pure price action. In fact, the entire session in Chicago was dealing with how to read underlying price action. Now we're going to get into that a little bit today too, but when we're looking at different indicators that can help provide additional confirmation, especially for newer traders and those, you're dealing with some choppier markets, then Fibonacci is one of those time-tested indicators. And actually, it's more like a group of indicators. So you've got Fibonacci expansion levels, extension levels, fans. There's a whole slew of ways you can use Fibonacci with trading. And the reason I love Fibonacci so much is because no matter what, it stood the test of time. It's one of those things that's been around in the industry for quite a long time. And whether you believe in the use of Fibonacci as it applies to nature or psychology or whatnot, it's really hard to argue against how well it works when you're looking at charting. So I'm a technical trader. That means that I focus on using charts to read price action. I was trained and educated as an artist and a realist artist, actually, portraits and whatnot. And so when it comes to, looking at charting and understanding what's going on with the markets, it's really important to look at what is happening with the pure price action. Now, one person is mentioning that they are not seeing the video. So let's just do a check here. And how are you guys doing? Can you guys see and hear me okay? Okay, good. All right, so if anyone is having problems, what you might want to do is go ahead and log out of the platform and then try to come back in. So you should just see the original PowerPoint screen right now. All right, guys, let's go ahead and get going. So all of my charts today are by TradeStation. And in this class, we are going to focus on what momentum means in a security and the important role that it plays in determining a security's fate, how to correctly utilize Fibonacci extension levels to identify targets, and how to manage positions and adjust targets as a trade unfolds. So first of all, we're going to take a look at what momentum means. Now, for you that have been in a lot of my classes, momentum is really, I would say, the most important building block of price action. So momentum really determines what the outcome of a trade is going to be. In fact, it will determine if a trade is even worthwhile to begin with. So when we're looking at how momentum plays a role, if this was a chart of any sort of security, you pick it. It could be forex, futures, whatnot. When we're looking at momentum, we're looking at the trend movement. So when we have a movement in the market where you have like a V pattern, this is what I use as kind of my I guess you could say the basis of where I'm determining momentum to be. So I will look back in a chart over time, look for periods of where we've had congestion, back and forth actions such as these V's on these upside down mountains. And I consider that to be average to sometimes above average momentum. I don't use things such as like a 30% incline, 40% incline, anything like that, because when you change your charts and you change the scaling of your charts, that's going to change your percentage. So I've seen people refer to that in the past, but you really cannot rely on that. So instead, look for those periods of where you have these V's and inverted V's, and that's going to give you an idea of where typical average momentum is going to be. So the basics of momentum are when you are looking at an average to above average move in any type of security, and then you have a slower, much more gradual move as the correction, your odds, of course, are going to be pretty high that you're going to have a continuation of the stronger momentum. This initial move is what we call an impulse move, and I'm going to show you what this looks like on some of the individual charts here in just a minute. Now, ideally, when you're looking at continuation moves, such as from 1 to 2, what we want to see is a corrective move that holds within the upper 50% of this initial impulse move. So if the correction is more gradual than these V moves back and forth, and it holds in this upper 50%, you're going to have a really strong chance of having a strong continuation move. Now, as a trend progresses, you guys have probably heard, no doubt, that trends like to move in waves of 3. And when you're dealing with trend continuations, as it hits that third move on the upside, at that point, you will usually start to see momentum begin to change. So it's not uncommon that even if you see a stronger than average or an average move on the upside like we have going into the high here at 3, you can still get a stronger increase in momentum on the downside. Now, when we look at momentum, it's always that last section of an impulse move that is the most important in determining how a correction is going to unfold. So oftentimes when you have that third push to highs, or any push to highs really, if you don't see a shift in momentum such as this at the highs, it's harder to get a stronger pullback or a stronger correction. If you do have this shift in momentum, it's easier for the market to offer up a stronger move on the downside. When you do have a move that's pretty strong to highs and it starts to pull back with a V formation, there's going to be a higher chance that it is going to fall into more of a trading range or a trading channel, meaning that when it comes back up to highs, it's going to have a harder time penetrating that previous high. So here's an example of where we have a V bottom forming, and it's pushing to tempt higher highs, but the momentum is again shifting. Now, because the momentum has shifted here, as it's gone into that fourth high, a lot of traders will think, oh, hey, you know, it didn't follow through with just being a 3-wave move on the upside to hold the trend. It went and tried for the fourth wave. And yes, there are going to be cases where that happens. But what you have to remember is that when we're talking about risk parameters for a trade, when you have a setup that's coming off of the third high and it's pushing, trying to make a fourth high, there's going to be a higher chance that that is going to create a trap pattern. And that momentum can shift and lead to a stronger move on the downside. This particular setup here with the slightly higher high is called a 2T. Just think of it as double top or two tops. The same thing can happen at lows, and I call that a 2B. Ezra asked, what time frame do you use to measure momentum on? So you can use any time frame, and I usually focus upon whatever time frame it is that I'm looking to find a primary strategy on. So if I'm looking at intraday charts, for example, I'm going to be using like a 15-minute, 5-minute chart. So I will look at that time frame, and then I will go up one time frame. So if a strategy is forming on a 5-minute chart, I'm going to go up to like a 15-minute because that's going to show me what the average momentum is on the larger time frames as well, so that I don't get lost in what's happening on the smaller time frames. So when we're looking at how to read momentum, we know that price action goes back and forth like this. And the best way to read momentum is just to try to stick a line right through the middle of these waves. And that's going to give you a better idea of where momentum is shifting. And it's also going to help you eliminate situations where you might have an odd tail on your candlesticks if you're using candlestick charts, or a sharp move outside of that general trend channel. So you just want to focus on what's happening within the body. For example, you can see here that we had a very typical 2T formation right here take place. And in this case, it even had the nice 1, 2, 3 waves up into highs, shift in momentum at the highs, created this pullback in here. So at that point, we had that V formation happen. And you'll remember that just a minute ago, when I talked about V formations, that is more likely to push the market into a trading range or a trading channel. So in this case, we ended up seeing it continue, but as we saw it continue, we saw a slightly higher high and a slightly higher low. So that meant that we had another trend channel forming here where the momentum was shifting. So even though the smaller moves showed momentum that was strong on the upside, when we went and transected that entire trend move that was beginning to form, meaning that we had a higher high and a higher low, then that showed a change in momentum, where compared to this downside move here, we had more of a sideways trend. And that created this turnaround in the trend, and it helped lead to the stronger downside. We even saw another variation over here where the channel widened. And this is something that a lot of traders can miss. But when you go and look at it and look at the back and forth action, we again have the V formations, but the channel itself is switching because we have a lower low and a higher high. So in actuality, this is a sideways trading channel. So it's continuing our trend progression of changing momentum to favor further downside. And this is going to become really important when we go and look at applying Fibonacci. The first concept I want you guys to be familiar with is very straightforward. When we're looking at momentum moves, if a continuation move has similar momentum as an initial impulse move prior to the zone of correction, in this case it pulled back about 50%, then that momentum is usually going to give us a target level that is going to be approximately equal to the impulse move that came before. So even over here, you can see a similar example where there's an upside move, a nice two-wave pullback here, a little bit of an inverse head and shoulders, continuation move. So this move here, we'll just call it 0, was very similar to what we saw on A. And that continued where A equals B. So that puts us at a target zone that is really comparable to a measured move. Now, when we're looking at measured moves, we are looking at zones for a target. A lot of traders get caught up on an exact price level. So they will say, okay, my measured move is exactly 5 points or $5. What we need to look at is a zone. And as it comes into that zone, we need to pay attention to what the momentum is. A question here, somebody asked about where that inverse head and shoulders was. So here is that pattern here. Here's the shoulder. Here's the move down to the head, pulls back up. Now the second shoulder, the right shoulder, is hidden a little bit by my line there. But there's the inverse head and shoulder. So shoulder, head, shoulder over there. For additional questions, if you have them, if I have time, I will answer them at the end of the presentation. So just keep posting them, and I will get to as many as I can. Now, another aspect of momentum is that when momentum is changing, that can affect what we also look at for target levels. So when we have a stronger momentum move than compared to the trend that came before a period of congestion, again, we have a two-wave pullback in here, then as that momentum increases, it's more likely to push through that measured move target level. So we're actually more likely to get a higher move. So when we look at adding the Fibonacci extension levels to our charts, we would look at starting here. We would have our first point here for the Fibonacci extension, second point here for the Fibonacci extension, and third point here for the Fibonacci extension. And this is going to put Fibonacci levels up here at these points where it would give us the 100% continuation as well as points along the way. Now when momentum is shifting where we start to see a slower continuation out of the pullback, then we're more likely to see it not hit that 100% continuation move. So with momentum shifting here, when we add Fibonacci extension levels, what we would do is we would start down here. Fibonacci extension levels are a 3-point extension, which we'll talk to in just a second. So you'll have your first point here, second point here, and third point here. And as that extends, that's going to give us price resistance levels based upon the Fibonacci levels. I'm sorry if I pause every once in a while. I'm getting over a virus, so I just don't want to cough in your guys' ear. So every once in a while, I might mute for just a split second, just because I don't want to, blow out anybody's eardrums or whatnot. Yes, for those asking, this will be recorded, so we can go back and look at this as often as you want, and I highly suggest you guys do that. So it's a great chance to review everything. Now here's adding the Fibonacci price extensions to our charts. So in this case, we have an avalanche strategy, which is part of a head and shoulders. And here's the shoulder on the left. Here's our head. And then we had a pullback up. Now in this case, the pullback is a little bit higher than that 50% level. So it's not one that I consider to be ideal, but we did have some shifting momentum on the smaller time frames here before it triggered. When we look at adding these Fibonacci extension levels then, we're looking at taking the absolute high, pulling it down to your absolute low, and then going to that third high. And that third high is going to be within this correction that takes place, whether it is a sideways base or a pullback. And that is going to add those extension levels. So when momentum is really comparable, our price target is going to be the 100% Fibonacci extension level. As with most cases, though, it's very rare that we see that sort of exact equal move as far as momentum goes and as far as price goes. But this gives you a general idea, especially if you're day trading where you need to make really quick decisions. Oftentimes I'll enter a trade and I will have an exit order on the books for that day trade that is at these Fibonacci extension levels. So for example, if I see that the momentum is kicking off, really typical to what I would be expecting, then I will place an order on the books just prior to where that exact 100% extension level would be. And at that point, I then watch and monitor the trade as it unfolds. So as momentum changes, as the trade unfolds, then I can go and make adjustments accordingly. Now, here we can see this was a trade that was on the euro dollar, and initially it kicked off with very comparable momentum, had a really strong move to the downside. Oftentimes within a trend, if you don't have a three-wave trend development, for example, if you're in that sideways trading range, you will have a more common occurrence of two waves back and forth. So it'll look like this. Two waves up, two waves down, two waves up. And we can use that to measure a lot of corrective moves as well as continuation moves. So I think in terms of twos and threes most of the time when I'm trading. And with an avalanche setup, we are looking at a strategy that is on the downside. There's a couple of ways you can look at entering an avalanche. You can look at the channel break, or you can look at a setup that is happening on the smaller time frame. So when you're using the smaller time frame, you would drop down and look at what momentum is happening on the smaller time frame. So for example, you could use tick charts, since this is a 5-minute chart here, or you can use a 1 minute or a 2 minute time frame, and that's going to help give you an idea of where momentum is starting to play out on those smaller time frames. Now when we look at this continuation here, even though the initial move was really strong on the downside, it tried to continue with a shift in momentum. Now, as I'm in a trade, if I start to see that momentum begin to shift, I'm going and dropping down to smaller time frames to start to manage the position even farther. Because at that point, the odds of it hitting my 100% extension level is going to be smaller. So you can see that in this particular trade, it did hit that exact 100% extension level. But if you had an exit on the books at that level, you have less of a chance of it getting filled. Now, like I said, usually I will have my target trade on the books to exit the position just shy of where that exact 100% level is going to be. But if momentum is shifting, it still becomes harder to get fills at that level. So I go down and I look at what is happening as it continues. And hold on a second here. So as the momentum is shifting here, we can go and add the Fibonacci extension levels now on the smaller time frame. This is a 2-minute chart, and when we are adding the extension levels, what we look at is basically the same type of activity that we saw on that 5-minute chart, where we go, we start our Fibonacci extension levels at the beginning of the trend. In this case, the smaller trend is that continuation move on the downside. We get a pullback here, and then as it offers up and begins to continue, and I see the momentum starting to shift here, meaning that when you go and transect this move, here is the shift, and we go and put that third extension level at that high there. Jeanette, if you can hear me, we can hear your keyboard in the background. So I just wanted to give you a heads up for that. I don't know if she can hear me or not.
Hey, I'm sorry. It was John. It looks like John signed in and his mic was hot. But
Oh, sorry.
Good call, Tony. Crazy things happen when somebody's mic's hot and they don't know it.
I know. I guess you guys heard me talking to my family earlier, too.
Yeah. Well, we did, but you weren't live yet. So I was like, oh, she doesn't know her mic's hot. So I muted. Anyway, go ahead.
All right. Sorry about that, guys. We've got a lot of different presenters here today. You know, Hema and John are coming up. Both of them are awesome speakers, so you guys need to stick around and take a listen to them and what they have to say. Okay, so getting back to our chart here. as we are looking at the Fibonacci price extensions and we're adding this to our chart, what you'll notice is that the 61.8% extension level here is the zone that really ended up holding this continuation move. And when momentum is shifting, I start to adjust my target levels based upon usually that 38.2% level or the 61.8% level, because these are the ones that end up holding very, very well. Now, by the time it hit the 38.2% level, though, you'll see that the momentum was still pretty strong. It was offering a continuation that was really similar to what we saw earlier. But as it hit that 38% level, it started to shift momentum. And this is not at all unusual. So when we go and look at additional examples going forward, you're going to notice that many times momentum will hold a certain, at a certain pace as it's coming into these Fibonacci levels, like the 38.2. When it hits that level, that is often a trigger for when momentum can start to shift. So like we see here on the euro dollar, it hit the 38.2 and then the channel shifted. Now remember when I drew those channels earlier? You can go and put your line right through the middle as things are starting to unfold to give you an idea of what that momentum shift is going to be like. And as we go further, I'm going to give you a few tips for how to further understand that this 61.8% level was the zone that really you needed to start to look for to take the majority of your gains off. Now, granted, in this particular example, it did bounce and go and push a little bit farther. So here's that 100% extension on the 5-minute chart. I kind of drew that line there here with the arrow. Notice it also corresponds to the 76.4%, which is a Fibonacci extension level. But because the momentum shifted, guys, it's not really able to put in solid testing at this level, meaning that when it hit this level, the volume traded at this level made it very difficult to get out of a position. And instead, we saw it whip right back up into the same zone of support that we saw holding earlier. So with the continuation of the momentum shift, if you saw this bounce happening right here, and you were still holding out for that 100% equal measured move, but it forms a V formation at this lows as it tests the 100% level the first time, even though it only hit it with just a couple of trades, you would still want to use that next start on the move down to go ahead and close out any remaining position you have, because the odds of it again trying to retest are going to be very slim, because at that point the overall momentum here is still shifting, because when you go and transact this move right smack in the middle here, that is still showing that change in momentum taking place, meaning that you are more likely to get a reversal start to happen, and you don't know going into that how fast that reversal is going to take place. Because the momentum is shifting here, you could easily get a reversal that turns around just as quickly as we saw when it came off of the highs. So you really want to be cautious if you are seeing that momentum shifting into these Fibonacci price extension levels. So going forward, I'm going to show you guys now another example. This example is from this week. Oh, actually, I've got one more thing to show you here first, and that is the Fibonacci fans. Getting a little bit ahead of myself here. So Fibonacci fans are another tool that you can use to add to your charts to help provide extra confirmation of where support levels are going to be. So a Fibonacci fan is looking at a previous trend in this case, is that larger uptrend heading into the head and shoulders pattern. And as you apply the Fibonacci fan, that's going to give you levels of support. So you can see that the avalanche, which is also the shoulder over here, took place between that 61.8% and the 50% level. So when you're looking at continuation moves, if you have ones that are holding within those support levels, such as the 61.8 and the 50%, and they're trading in that channel, it can help offer up a stronger move for continuation, even if it does try to push slightly past that exact 50% move on the downside. So because it held within that channel, it was still a bearish pattern that was starting to form. Now, as this continued and broke lower, you'll notice that the next fan level was that 76.4. Some people use 78.6 as well, so I have it on here kind of as a dash. But the 76.4 is really the big one that I use. So you'll see that when it hit that level, that corresponded right here to that 38.2% extension, the Fibonacci extension that we were just looking at on the smaller time frame. So now we have synchronicity at play. And with synchronicity, that means that that support level is going to hold even stronger. So even though we are relying primarily upon the fact that the momentum is shifting, when we have synchronicity in support levels, especially these Fibonacci levels, meaning that there's an overlap of where these Fibonacci levels are forming, and keep in mind we also had that 100% extension level here, then that further adds confirmation that this is going to be that support level to take your gains. Now let's go forward here and look at AAL, because AAL is one that's been in play recently, and this is a 60-minute time frame. And it had a very similar pullback and correction like we saw in the euro dollar, except in this case, we had more than that 50% move. So when it held lows initially at this third low here, you'll notice that there wasn't really any sort of trigger to get in on this on a bounce back like we saw on the euro dollar, where the pullback was a little bit more gradual. So what that means is that it's very difficult to get in at that initial low. So what I do is I look for continuation type of moves, because when we have this V pattern, it tells me that we are more likely to at least head back up to this previous high zone. And that offers up a really good target level. And in this case, there was still plenty of room for this to offer continuation. So the strategy that I had on AAL, which American Airlines, the reason it caught my attention is because airlines in general have been pushed down quite a bit. A lot of controversy, you guys, over the last couple of months, especially with United. So that's kind of started to hold down the entire sector, and the sector as a whole was at some pretty strong support levels. I think I have a daily chart here in just a second. I'll show you. So overall, I was looking for opportunities in this sector, which is what drew me to American Airlines in the first place. So on the smaller time frames, I was seeing the changing momentum begin to occur. And we had this nice V back and forth action. So although I was looking overall for a little bit of a continuation of the range in here, when this began to form this shoulder over here, again, here's one shoulder down into the head, upside, second shoulder. In this case, the shoulder is also called a phoenix, which is the first continuation move on the upside in a new trend. That offered a really nice base here that held throughout the day, giving the entry opportunity right around the 45.5 mark heading into the 21st. So when we look at target levels, we can look at target levels on two bases. We can look at that measured move on the larger time frame, the 60-minute chart here, where we go and draw our extension level from the initial low to the high and then to the low of the pullback. And that gives us that 100% extension. Now, if momentum remains as strong as the upside here in A, then that target level stands a really good chance of hitting. As you can see, we did see a bit of a shift in momentum. So just like we saw on the euro dollar, when it hit that 100% extension level, it only tested it very, very briefly. You would have had a hard time getting out of all of your shares at that point without it pulling back. But in this case, you know, there was another opportunity a little bit later on, but there's no guarantee that that's going to happen, because as this falls into a trading channel, this could have just as easily continued lower. So you don't want to bet your money on it trying to retest those highs, because that simply might not happen. When we look at this strategy on the larger time frame, here's the daily chart. So as you can see, this had a pretty sharp downside move here over kind of into the end of the year, or sorry, end of the summer rather, end of the year. I'm getting a little bit ahead of myself here. It had a three-wave trend on the upside, and then we had it start to try to shift momentum here, holding a midway point, and then this was the continuation of the shift in momentum, where basically we had this rounded low here. And as this was forming, this is that two-way pullback. So it's also the handle of this cup with handle pattern that's formed with these two lows. And when we go and add the extension levels here at this point now, we can look at, okay, what is the extension and the, or sorry, what is this pullback level and offering the extension on the upside? And when we compare it to this pullback here, we have a 38.2% level that is serving as resistance. Now, let's go back and look at adding the fans to this. So here we add the Fibonacci fan, and just as on the euro dollar, you go from the high to the low of the trend, and in this case, this was just slightly lower low. It wasn't substantial, but it was a slightly lower low there. And we might have seen it have a little bit of a lower low. That's pretty common as well, too, as the momentum starts to shift. And this will give you those fan levels. And we add the fan levels because that gives us the zone where we can look at, okay, where the extension levels and the fan levels start to come together and offer up that synchronicity once again. So we have that overlap there with both of these Fibonacci levels. And when we go back down to the smaller time frames, we can even add the fans on the smaller time frames just within this pullback itself. So on the larger time frame, here's the daily down here. Here's that pullback. And so we're going from this high to this low now and adding the fan there. Now, the continuation breakout here, you'll notice that the 100% level is right here. So I just did that measured move, which would be your Fibonacci extension. You take 1, 2, 3. That offers that 100% level right here, which corresponds with that 76.4, 78.6 zone, which also corresponds to the 100%, and that gives us a first initial resistance level. So this is a good place, you know, to take some of the position off to protect yourself in case we do see any sort of shift in momentum, or a good place where to at least you can expect some sort of a pause at that zone. So it won't be a shock if it pauses, forms another comparable correction before it tries to go and push for a third move into highs. So it gives you kind of a heads up where your initial target level for the extension will be up here for the 100% extension, But you have to pay attention to where those price levels are that it can pause. And you want to watch how it reacts to those pauses because you want to see more of a sideways type of trading range or a more gradual pause where it holds, in this case, within this channel here. So your 61.8 and your 76.4. In this case, it didn't even bother trying to test the lower limits of that. It held up here really, really well. Going forward, we can look at the larger measured move. So here's where that larger measured move played a role. Here's where that fan level on the larger daily time frame served as resistance. And we have also another continuation move that kicks off in here, where here's that first measured move, and then we have a continuation move, where you also have a 100% measured move that would hit at this level. As you can see right here. And just as we saw in the euro dollar, when you go and add the Fibonacci extension levels here, 1, 2, 3, when it hit that 38.2% zone, that's where, once again, we started to see momentum begin to shift. And this is really common when you start to head into levels of previous resistance, like a prior high, as well as that 100% extension level. So as it comes into this zone, instead of saying, you know what, I'm going to hold out for that 100% level, I start to begin to phase out of my positions. I'll keep usually part of the trade on the books closer to that 100% level and watch as the momentum begins to play out within this zone. If momentum on the upside continues to be stronger, like this push here, there's a better chance it's going to hit that exact 100% level. But if it starts to shift and we get the back and forth V action, it becomes more difficult to hit that exact level. Now, what we've seen here in the previous two examples is that as momentum is shifting, it usually happens in a number of waves on the smaller time frame. And there's a very clear-cut pattern that forms that can give you the indication that you're going to see a reversal strategy take place or you're going to see those highs hold. So, you know, in the previous examples, this would have been like that 38.2% extension where the momentum began to shift. In this case, it's actually even smaller. But it is really common that as that momentum shifts, you will see back and forth movement like this, where the momentum is changing. Now, this is where we can go back to trend analysis. Oftentimes, these highs, as the momentum shifts, are going to take place in 2s or 3s. So you might see an initial high, it goes longer, and that changes the momentum even further. So instead of like maybe a 1-bar move that can pause it, you'll see maybe a larger correction here, so that can change the overall momentum even if it starts out strongly. But as it goes into the second high, if that momentum is shifting, then that offers confirmation that instead of waiting, you know, for a third high, you can even use that channel break to take as an additional trigger to reverse a position or bail out of the position with twice as many shares to change that. If the momentum is similar still, going back and forth, then you can get a third high. And that can be used as a reversal trigger as well. So when I'm teaching strategies, I often start by teaching a trader a core strategy, like a two-wave continuation move. And by teaching them that strategy and going into great details on that strategy, they will learn what the strategies are that can follow that strategy. So you will learn, for example, continuation moves that can happen as well as reversal strategies where when momentum changes coming out of it, it can actually offer a reversal. So when you're looking at patterns and how they unfold, really you have to think in terms of an ongoing fluid market. A lot of traders get wrapped up in, well, this is XYZ strategy, this is XYZ strategy. They look at it in snapshots, whereas momentum shows us that the market actually moves very fluidly. And as momentum changes, that impacts not only the strategy you have traded yourself, like this two-way continuation here, where once again it hits the 38.2, it pauses a little bit longer. It helps shift the momentum further. Then we see a pullback here. It looks like a V to start with, but momentum again continues to shift. So if you're in that position and you're seeing that momentum shifting into the 76.4, that's where you go ahead and you protect that position. Because with that change from 1 to 2, you're more likely to see that too high hold. It can offer you a reversal strategy at that point if the larger time frames hold for it, or you can wait for something like an avalanche. And this would provide you additional confirmation. As this changes the momentum once again in here between the 61.8 and the 76.4, it offers additional confirmation again that if you are still in this long position, get out. Get out as it's coming back into that extension level, because that extension level is probably going to hold. You have to be proactive. You can use that to cover your position and even start to look for reversal strategies at that point, because the momentum has shifted so well. And this is what I will do throughout the day, all the time on day trading, especially on the minis. And here's another example. Going back to our AAL, as it hit that resistance level, you can see that it tested it 3 times. 1, 2, 3 at the 100%. In fact, you might have even considered this to be your first test. So if you wanted to be even more proactive and you might have had a little bit trouble, reading this exhaustion, you could have even said, wow, when it hit the 76.4, it paused a little bit. So you might even consider that, okay, maybe that's going to be the first level. Here's the second level. Here's the third level. And that tells me, okay, I really need to be getting out as it's coming into that third level, especially since in this case, the momentum's shifting. We had a stronger pullback here and then a slower period of congestion here on the upside. So if you're not already out of position, you didn't get out when it approached that 100% level, you can use that attempt to pull higher to exit the position as it's moving higher. If you happen to miss it, in this case, got a little bit lucky, it went for a third test here. But once it does that third test, guys, especially if these are measured moves between those 3 highs, you're done. It's over. So use that to go ahead, protect all of your gains, and you can even use them, for reversal strategies if you're looking at day trades and short-term trading. So there will definitely be a recording of this for those of you that, want to go back and review it. And for those of you that want to learn even more and get into greater detail on this, I have a boot camp coming up here in just less than 2 weeks, actually. It is a 6-week boot camp where we go in depth into all of the building blocks that go into reading price action. So we look at not only momentum, but also how the Fibonacci levels, going into more detail on these Fibonacci levels, will come into play as support and resistance, using that synchronicity that I touched upon today. We had a really short period of time here to cover something that can get pretty advanced and complex. But go back, review the videos. I had to pause a few times with this ongoing cold that I've had, but hopefully, you guys have a chance to go back and study this and go over it as many times until it starts to sink in and start to apply it to your own charts. Now, with this boot camp that I have coming up, I've really switched from doing a lot of just the static courses to, over the years, doing a lot of small group mentoring, where those that are participating in the mentoring actually have to participate. So unlike a webinar where you sit back and you just watch and you ask questions, in the boot camp and the small group mentoring that I do, you guys have to participate. So that means that as we add these Fibonacci levels to our charts, I have members actually pull up their own charts, draw on their charts where they think that the levels will form. Now, usually I ask for volunteers, so those of you that are a little bit shy don't necessarily get put on the spot. If you've been a student of mine, though, don't expect to have that sort of grace, because I do put my students on the spot because they have been with me longer. And what this does is it gives you the opportunity to actually see the market unfold live. I use live trading, the live markets, so you can see how this is happening in real time. So each week we focus upon one of the building blocks that I use for analyzing the market. So one week we look purely at momentum, for example. One week we will look at sort of the support and resistance levels as applying like the Fibonacci. One week we look at volume, and we look at them how they all come together and work together for analyzing not only our entries, looking at live trading on the entries. You guys, I ran a live trading room day in and day out for 15 years. So to begin with, I was running a room for like 16 hours a day, because I would be there in there at night. We'd be looking at futures. I'd come in at 3 in the morning and we would be looking at forex. I really have traded pretty much every market out there. And whether you trade options, futures, or forex, we will be flipping back and forth between the different types of securities so that you can see that this is really a universal model for trading. I had to take a little bit of time off for a medical leave a while back and come back to trading. It's just like riding a bike. You take a break, you come back, you can trade whatever time frame works with your personality. It gives you it will open your eyes to understanding all of these patterns that the other traders like Hema and John are going to come and teach you. It goes into the pure price building blocks of all price patterns, all market action. Once you understand that price action, you can really apply it to basically everything. So we're going to learn the 5 most powerful tools to rely on every day in order to calculate the odds on each and every trade that you take. Meaning, we will look at trades that I will say, okay, you know what? Target levels on this, we only have like a chance of getting a 1-to-1 target on this, but it's going to hit that target level 80% of the time or 90% of the time. And I'm even going to show you guys a pattern where it will hit the target level 95% of the time, offering at least 2-to-1 return on the risk. And sometimes that same strategy offers as much as 20-to-1. It is my favorite strategy. It's based upon momentum and shifts in momentum, so we will be covering that strategy in depth. We're going to learn those specific techniques for timing your entry, placing your stop, and maximizing your gains, and we're going to be doing it on live charts. So you will see this happening real time. So as strategies change, everyone has particular strategies that fit their unique personality. You might go into one of my boot camps where we are focusing upon a particular strategy, but you're going to learn how to adjust that strategy to fit your personality. So when traders teach particular strategies, they say, oh, you can take this strategy and you're going to get 2-to-1 on this strategy day in and day out. And you go and you try to replicate that strategy, and lo and behold, you can't replicate the strategy the way that they did. Well, you need to understand why. Why can't you replicate the strategy the way that your mentor taught you? It comes down to those building blocks of price action, like momentum that I touched upon today. Once you understand those building blocks of price action, you're going to understand which strategies that look like the strategies your mentor might have been teaching you, but why they might have greater risk. And your mentor might never take the same strategy that you are seeing because they see that greater risk. Maybe to them it's intuitive. Maybe they have further advanced systems that they analyze for taking that strategy. Well, I go into the building blocks that are going to help you understand why some of those strategies are working and why some of those strategies are failing, so that you can make more informed decisions as to which ones to take and which ones to pass on. Not only that, we're going to talk about a sixth signal. Now, when I first began teaching price development and how price development worked together and the building blocks of price development, I had 5 things that I looked at, everything from correction periods to volume to trend development. But in the last 10 years, I've added another one, and it's not taught in any of my original courses. So we will be covering that one as well. And it has to deal more with understanding the time development and how time really plays a role in whether a strategy is going to be successful or not, and the key points that you have to get into strategies or avoid them altogether because it's simply been too long. Again, you can learn more or actually go and register for this session at ToniHansen.com/bootcamp. You can send any questions you might have to Tony at tradingfrommainstreet.com. This bootcamp kicks off on October 11th at 10 a.m. sharp. So I will give you guys about half an hour for those of you that need to manage your own positions and deal with what you need to do in the market. Also gives me time to do some scanning on my own to see what strategies we have that are developing and unfolding that we can start to focus on once we get into the live trading. So we start at 10 o'clock. Usually I will go for about an hour and a half, but sometimes I go over. I have a habit of, sticking around a lot longer answering questions at times. So, count on an hour and a half, but it might be a little bit longer. Everything will be recorded and it will be put in the member section, so you can go back and review those at any time. So again, if you have any questions, email me, Tony at tradingfrommainstreet.com. and go to ToniHansen.com/bootcamp. And for this weekend, as long as you get registered by the weekend, you can have access for $197. Now, this is substantially less than I have for most of my mentoring programs. It's an opportunity to lower your cost of private mentoring because you're participating in a very small group mentoring instead, but you still get the benefit of participating with me live, asking questions, not just sitting back and watching a webinar, but actually taking part of what is happening as it is unfolding. So take that, go ahead, check out that URL, send me any questions you have, Tony at tradingfrommainstreet.com. I'm going to put that email address in here in the chat box. So any questions you might have, I know you guys had a lot of questions here. I didn't get a chance to get to a lot of them. So email those on over to me and I will definitely check them out and get back to you in email. I do use TradeStation. And yes, you can definitely change the time frames on these. You can change the time frames on any time frame. So your extension levels are going to apply to whether you're using the shorter time frames and the larger time frames. Now with a trade, I usually go from the larger time frame to the smaller time frame. So here, Jeanette also posted it into the question and answer section of my email. So I'll start with a larger time frame. Usually I see a strategy forming on a smaller time frame. I go up to the larger time frame. I look at the support and resistance levels in terms of Fibonacci on those larger time frames, and then I go and apply them to the smaller time frames as well. So right now I have the bootcamp is capped at 25. So on the GoToWebinar platform, we can only offer that many where everybody can participate and go back and forth. So I'm looking at getting between 20 and 25. I don't usually like to go over 20 simply because it's harder for a lot of people to really interact. So that's going to be the cap on it. If you don't make it to this one, I'm not sure what the next one I'm going to be offering. It'll probably be after the winter holidays. Sorry again for the pause there, you guys. I'm still getting over this virus. So yes, it's once a week on Wednesdays, 197 for 6 full weeks. So this is really a substantial value. Go there, check it out, ask me any questions you have. I'm going to go ahead and turn this over to Jeanette. We will be dealing, you guys, for options. We will be covering options strategies as well. So basically any market, any time frame. All right, guys, stick around for Hema. She is up next, and like I said, like Jeanette said, she's a little spitfire. You're going to love her presentation, and stick around for the full day, and you'll have a chance to win Jeanette's little contest she has.
I am losing my voice, guys. No, I hear you. Go rest it. Go rest your voice. All right, I'm gonna thank you, Tony. Thank you for your time, and go.
All right, thank you. I'm gonna go drink some water, and I will talk to you guys all later.
Okay, bye.